Hey everyone, welcome to session number 3 with Felix Hartmann. Felix started trading from the library at his college in Florida between classes and wherever else he could fit it in. He's here to talk with everyone about building systems that match the life you want. Don't want to spend 8 hours a day watching the markets? Don't. Felix will show you how you can imagine the lifestyle that you want, then work backwards to plan how we can make that happen. Now, not only that, tonight at 8 p.m. Eastern, 5 p.m. Pacific, you can tune in for a special live Q&A with Felix. He'll be available to answer any questions that you might have about trading, balancing life in the markets, or how to get started with his systems. You're not going to want to miss this. All right. Hey, Felix. Welcome to the Digital Stock Summit. And thank you so much for coming on today.
How you doing, Jacob? Thanks for having me here.
Absolutely. So, just to kind of get things started off, why don't you give us a little bit of background about yourself? How do you come to trading? What's your background look like? That sort of thing.
Awesome, of course. So I was born in Germany originally in 1995, so I'm only 21 years now. And back in 2008, I moved to the US. And sometime in high school, it was my senior year, back in 2012, I started looking into stocks. It was just one of those things. I think some friends started doing virtual trading, so I looked into virtual trading. And within 3 months, I was up 72%. And then that's when I realized, hey, you should turn this into more than a hobby, more than just trading some fake money and making a lot of money off it. So why not try it for real? So after I graduated high school, I decided to take a gap semester, and I've had a whole semester of time to, first of all, I worked a job, I worked minimum wage, raised a lot of money so I could fund my first trading account, and I also decided to take some trading classes online. Like I just took knowledge from wherever I could. I picked up books, I watched webinars, anything on YouTube. Basically, just I wanted to learn as much as possible about the stock market and how to make money off of it. So I continued to practice, and then come December of that year, I made my first real money trade, which was the Tesla. I was after the IPO. I got in when right after the drop, so I got in basically at the cheapest point you could have bought it in the past 5 years. It was really good, and from then on forward, I kept practicing, using it more and more, and I wasn't profitable at first. I think for me it was I'm a very experimental person. So I always like to try new strategies and find the one that helps me the most. And it really worked out because at some point in time, I did what I called the 1,000% ROI challenge on my website, and within 1 month I was up 250% because basically up until that point I was always trying new techniques, seeing which works best. So because I basically gained all this practice and all this experience, and I took the liberty of being okay with losing a little bit. I now know the different strategies that really work and put them to use, and really create ROIs that crush not just the market but most other traders.
Awesome. And so you started just after high school, and you're a full-time college student right now, right?
Right, I'm still a full-time college student, so it was kind of an interesting story because the average college student, I still partied, of course. I was actually a fraternity president, so I had plenty of that, but I would sit in the library of my university while other students studied, or while they were just, sitting in their rooms playing FIFA. And I would just look at the charts, sometimes 4 hours in a row, 8 hours in a row, studying the charts or day trading, taking online courses. I remember one night, for example, it was, I was in Creek Lab, so there was a Creek Week dance or something like that. And I looked at the time oh, damn, one of our webinars is about to start. So I walked out in the middle of it and went to the library into a quiet corner, was in the webinar, and I was actually part of presenting that night. So, the coach called on me, and I was presenting my analysis and everything, and, it was top notch. But the point was, it was always such a balance between things. On one hand, I was a very involved college student, but on the other hand, I would put that time in, because I think that's a huge thing, that if you want to become successful in trading, it's not just, you put your money and you becoming rich tomorrow. It really takes, that dedication and that persistence, that first of all, you're going to take the time to learn it in the first place, and also stick through the losses, because I think there's some statistic out there that says the average trader takes 2 years to become profitable, but also the average trader quits after 6 months. So I think a lot of us traders get afraid after losses, or we're just so sick of it because, losing sucks, of course, but when you can sit through those losses and find out what really works, that's when you can become profitable.
Sure, absolutely. So what was some of the biggest challenges that you encountered trading from your library?
Well, I mean, in the library, that's where I guess most of the time happened. I've had all kind of places where I traded from. One day, for example, it was after a party. It was a Friday morning because I would day trade every Friday morning. That way, I was able to get around the PDT thing. The 5 days. Every 5 days I would do like 3 day trades, and it was after a party, slightly hungover, and I was like, no, it's Friday. I got to day trade. This is my time. And it didn't end up that well. Biggest loss I've ever incurred. So I guess the biggest challenge is, as a college student, you've got so many things, like you've got a social life to manage, you've got classes to manage, and classes is a big thing for me too, because like, I want to day trade, but at the same time, I've literally sat in classes, like I was in a trade, and then the teacher tells me, Felix, close your laptop. There's like in some classes, there's no laptop policy, but I would still have it up. I would still day trade, and then it just sucks basically because I have to close it a day trade, even though like I can't keep it writing out, or I have to close it in losing position. So there's a lot more factors that really play into it. So, but I mean, then again, if after college you'll have a job, and the biggest thing especially if you want to be a day trader, you have to find a way to make time at least from like 9 till 11 p.m. because otherwise life just gets in the way, and that's a big hold up.
So you found that I guess doing a lot of your studying and preparation in the evenings was kind of a big strategy for you to try and balance the life trading aspect.
Yes, preparation is key. So I still do that, and recently, I mean, during the summer mostly, I've been putting it on Periscope as well, where basically every single Sunday is when I prepare. So I have a specific trading plan, a specific strategy that I use on all my trades. So Sunday nights, I would spend 2 hours, 3 hours maybe, going through a number of steps and finding what are like the 5 traits I want to follow for the week. And I set specific triggers, and I know, hey, if it's above this point, that's when I want to enter. And I can even automate it. I can get myself like text push notifications. So it takes off a lot of that involvement, that stress. Like I don't have to constantly look on the computer. And that's also the reason why I mostly micro swing trade. Now day trading, it's from, let's say, for example, I enter at 9:30 and I exit at 9:37, or I exit at 10 a.m. For micro swing trading, it's usually like 2 days to 5 days. It's within 1 week. So I'm trying to capture basically the minor trends that go the same direction as the intermediate trend. We can get to that later. But the point is that it gives me more time. I set specific triggers. I know exactly where my target is, and I have very fast-paced moving risk management. That way, I can sit in class and it's not, my trades aren't distracting me, nor vice versa. I can basically, that's what I realized, like it gives me the biggest ROI on both. I can have a good personal life and I can have a good whatever I'm doing, but also make good money with trading, where it's not like, damn, I know I could have made more money if only that teacher wouldn't have told me to shut my laptop. Yeah.
Okay, so a big part of it was just picking the right strategy for you, where you were able to kind of craft the life and trading balance just through the strategy that you picked. It allows you to not be, I guess, focused on the charts all day, every day, and instead you can just kind of like check in on it maybe here and there throughout the day, but it's not like you said, it's not every minute you have to be watching it sort of a thing.
Right, and I think strategy, and this is kind of where coaching comes in, it's a very personal thing. There's a million different ways of making money in the stock market, and I know there's people out there that will say, oh, technical analysis is bullshit, you can only make money with fundamental analysis. Then there's the vice versa, where people say, oh, only fundamental analysis is the right thing. I say, I don't care what you do, as long as you're making money with it, go for it. And that's why I'm thinking it's very personal, because we all have different minds. Some of us are more analytical, some of us need to see those news stories to make a logical decision out of it. And there's other people like Tom from Tasty Trade. All he does is volatility trades. He only focuses on volatility. It's a whole different perspective. And yet there's others like Tim that's presenting later on, or Tim Sykes that, oh yeah, they're both Tim. Yeah, Tim. But they're doing penny stocks. Well, I would never touch penny stocks. So like there's so many different ways. What you really have to look forward to pick the right coach and the right strategy is figure out what's the kind of lifestyle that goes along with that strategy. Is it a hands-off strategy where I can go on a trip for a month and not, whatever happens? Or is it a strategy where I have to check in every 30 minutes, or maybe like, because with swing trading, you are, the money's ticking basically while you sleep. Day trading, on the other hand, you enter a trade, you exit a trade, you're done with. So it's a question of how patient are you? How much risk can you take? How much capital do you have to start with? So before just picking a coach based on the kind of ROIs they promise, focus on these things and kind of ask, like, so what does your life look like? Or like, what kind of person are you? And that way you can figure out what would really work for me. Because all too often we choose a trading style that just doesn't work with our psychology.
Okay. Yeah, and that's definitely a good point. Like kind of like you said, everybody's out there saying something different, so you have to figure out which is the strategy that's really resonating with you and whatever kind of lifestyle that you want to create. In fact, one of the days of the summit, we've got a couple of different people that it's all about lifestyle. That's what they're talking about.
Yeah.
Is we've got Marcello, the wandering trader, who he trades about an hour a day, and that's it. And then we've got Brad Jelinek, who he's all about living a healthy lifestyle through trading. And so it's all about finding the thing you want. Some people, they want to be the tech geek and have the 16 monitors and just sit there all day.
Well, and it's fun. It's fun sometimes, but then again, like, for me personally, for example, I do other things, and folks, like, I don't just want to have my whole life revolve around trading, which doesn't mean I'm not good. I can be really good, but at the same time, I don't need to put that much time in. I would say I've put in thousands of hours learning it in the first place, but nowadays, I would be lying to myself. I was going to say I spend only 15 minutes a day. I mean, that's the goal, but I'm still kind of curious and check every now and then. But basically, with my strategy, all I do is basically 3 hours on the weekend, 3 hours on a Sunday, and then every day check in like 5 minutes at 9:30, then maybe like 5 minutes in midday, and then 5 minutes at close to see if any of my stocks triggered or not. If they're triggered, enter. If not, nothing. That's something I tell my students always in regards to psychology, because psychology oftentimes gets in the way of our profits, basically. So I tell them, hey, is the stock triggered? Yes or no? If yes, buy it. A stock you're in already. Is it at your stop? No. Okay. Is it at your target? No. So don't touch it, because all too often we sell stocks that are neither at our stop nor at our target because we come up with some kind of I don't know concept idea where we think this stock's suddenly going to plummet, but really it's not. If you just follow your plan that you initially set, you'll be fine. So it's like one of the strictest rules that you set those two not basically values: where's your stop and how it's moving, where's the target, and if it's not touching any of those, stay away from it. And otherwise, if you do touch it, you have to have some kind of punishment system in return, where if you break your own plan, I don't know, shave your head or donate to your enemy, something like that.
I like that idea. So where do we begin when we want to try and figure out which system is the right one for us? You already kind of outlined, find something that resonates with the lifestyle that you're looking for, but how do we know who to listen to? How do we know, where do we even begin to try and figure out which one is the right one?
Okay. As for systems, I think the big factors is one, account size. See how much money can you actually put out there. Next thing is like, what kind of returns are you looking for? That's kind of a tricky one. It should be the last one because obviously everyone wants the big returns. But if you say, hey, I'm just looking to have like a passive 10% a year, 10% a month, or if you're saying like, oh no, I want 100%, ROI is on this flip side directly correlated with risk, right? So you have to ask, what's my risk return? What am I looking for? Am I looking for a 20-to-1 or more of a 3-to-1? And obviously that means also the 3-to-1 is less likely to blow up your account than the 20-to-1. The next thing is obviously how much time do you want to put into it? So it's time, it's money, it's psychology. To keep it simple, time, money, psychology, that's all there is really. How much money you have ready to invest? How much time can you allocate to it, and at what times? Because that also means if you don't have time from 9:30 till 4, maybe you have to trade Forex, so you have more time spent in between. And then obviously psychology, like, are you a person that will jump on any small like trigger where you're like, oh, this looks like a great trade, I'm going to enter it. You're just kind of shooting trades out there, and all of a sudden you're spending like thousands of dollars on commissions. That's for systems. Now, if you see, let's say you found a good system that you like, let's say trend trading. Now there's probably 100 people that teach trend trading. So what I would suggest for a coach is look at their performance. So first of all, look at their returns. Again, it's questionable because there's a lot of little fakes out there that only post their winning trades. If you go through my Twitter, you'll see plenty of times where I admit to losing trades because they happen. And when I have personal private students, I tell them of my losing trades because a lot of times you'll learn a lot from that. So make sure whoever is going to coach you at some point in time admitted to a losing trade, because if they don't admit to a single losing trade, they're lying, because like you will have a losing trade. I don't care how smart you are. I don't care how good you are. And then just simply look for referrals, like look for actual students and what they're saying. I mean, just because there's a small paragraph on a website saying, "Oh, I love this so much, it changed my life," doesn't mean that much. If you can see like an actual living and breathing person, or at least a living and breathing Twitter account that's saying like, "Hey, this really helped me," go for it. And I would say don't cheap out on trading education, because one single bad trade will probably cost you more than the education itself. Cause I've had losing trades that cost me $1,000. I've had losing trades that cost me $300. So why not make that initial investment first of all into learning how it works, then just saying, "Oh, I'm the king of the world, I'm gonna kill the stock market," because you're not. It's kind of like one metaphor I like to give is, doctors. When before you can become a doctor and like operate on a body, you have to go to med school. After med school, you have to go into residency, and throughout med school, first you practice on a pig heart, so like you kind of transition into going for the real deal. Same thing in the army. Before you go out into war, you go through boot camp. So for some reason, people think stock market is completely different. You just go out there and make your millions, which obviously won't happen. First, you have to go through that training, find a mentor, find a coach, put in the time, and then after a while, you'll get better and better and better. It's a skill like anything else.
All right. And then the flip side of that was one of the things that you said that you wanted to mention was raising funds. Where do we get the money to begin with? Is it just a matter of just saving up? Do we, any strategies or advice that you have on that end of things?
I would say definitely wait to trade until you have at least $2,500 allocated to trading, just because with most brokers, anything less will just kill you in commissions. Like even if you take a cheap, let's say stock options, like for example, I use Options House. For me, a round trade is $10. So if I invest half my portfolio, let's say I only have $2,000 and I'm investing half that money, obviously it's $1,000 trade. I'm already losing 1% just off commissions. So, and I get plenty of emails and DMs from young people that want to trade, like, "Oh, I have like $500 saved up. How can I get started trading?" I'm like, just hold up, make some more money, because if you're only trading like on a $100 trade, for example, and you pay $10 commissions, you're losing 10% in commissions. So like, forget about trading until you can save up at least $2,500. And even $2,500 to me is a practice portfolio. Like don't expect, like, yes, you can technically get rich of it, but like don't beat yourself up. This is all about becoming consistently profitable, and keep your day job at the side so you can, like keep adding funds, because even if you add, $200 a month, let's say $300 a month, that adds up over time. $300 a month times 12 months, that's, like almost $4,000. It's $3,600. So like, if you do that every single month, quickly you'll have a $10,000 portfolio, and at that point you don't have to worry that much about commissions anymore. As to raising funds, like I said, for myself, I think if you work for yourself, it's the best way. Sure, there's a lot of people that get money from mom and dad, but I think there's a stronger connection to the money if it's your own, because you're less willing to like do stupid shit, Because I remember when I did that after that party when I was hungover and I lost $1,000, I was like, holy damn. I just lost 100 hours of work basically, and that starts resonating. You're like, I'm like, basically in less than 1 hour, I lost 100 hours of work. So like, it means so much more than if it's just like, oh damn, lost some numbers on the screen, So you basically associate that pain with making mistakes, so you don't make those mistakes anymore. And if again, as to raising money, you can let's say you have 2 months. In 2 months, you want to fund a $2,500 account. Cut out at least $10 in expenses every single day, because you don't need that Starbucks, you don't need to get the soda. You can save money easily, like $10 a day is no question. So on 2 months, you got $600 just from saving, like spending less. Now you've got $1,900 left to raise, and get a job. even if you're totally unskilled, and I'm sure you're skilled because you're watching this, you have some value. But even if you get paid $10 an hour, now we're talking about working 190 hours divided by 8 months. You know, 8 months, 8 weeks. I'm sorry. You're not looking at that much. You're looking at like 20 hours a week or not. It's very, very manageable. So put in the work, that way the money means more to you, and keep working so you can keep funding the account, because it's so much easier in the beginning. Think about it. If you have a $2,500 portfolio and you're just crushing the market, let's say you make 10% a month, you're making $250. You can make $250 working minimum wage in 25 hours. So in the beginning, unfortunately, you can make more money working than trading. But eventually, once those numbers get bigger, working can't compete with trading. That's when trading gets profitable. Because when you have $1 million portfolio and you make even just 1%, you're making $10,000. If you make 1% a day, making $10,000, fuck yeah. But in the beginning, obviously it's slower. So I would say definitely, stay humble, keep working, raise that money, and go from there. And don't ask for free handouts. Don't go to anybody and ask for free money, because probably you'll lose it the first time. You might blow it up, or you lose a lot and then you'll feel bad. Take that emotion out. Don't owe anybody anything. Raise it yourself.
Awesome. I like that kind of internalizing the pain through having to actually work for it, and that's some good advice, as well as kind of good expectations management. A lot of people will come in and think, oh, I'm just, even with a $2,500 account, I'm just going to be crushing it and I'm making all this money. Well, 10% is a pretty darn good return. And like you said, that's only $250 a month.
Yeah.
So if you think about it that way, it's like, oh, well, okay, I guess that it is going to take a little while.
Right. But something that always drove me to keep going with trading, despite the losses, despite all the time I put in, is I figured at some point in my life, like almost every single person, I will want to try investing/trading. So the best time to learn it is now, because I created like a spreadsheet where, like, even if I just I lowered my expectations so much. I was like, even if I just make like 2% a month, 2% a month is still beating the S&P. And then by the time I'm like 40, or 35, I'm still a millionaire. It's crazy, because like those numbers keep getting bigger and bigger. In the beginning, you're talking about a few dollars. You're talking about maybe a few $100s. But once you can get that portfolio to the 10,000s, now it's becoming seasonable, and you might start living off of it. So definitely stick with it. And once you get profitable, not only will your returns get bigger, but it's compounding interest. So it works in your favor.
There you go. So I think that's kind of definitely a good solid foundation to build on. I'd like to actually get into a little bit more of the details and specifics about the strategies that you like using. Like you said, sure. You like technical micro swing and directional options. So can you kind of give us a quick little layout of, what are each of those? You already kind of touched on the micro swing, but maybe go into a little bit on the directional options and kind of give us a little framework to have in mind as we go forward.
Got you. So micro swing trading, they're both the same, like the different things, but the same thing. So micro swing trading is basically the time frame. So I'm saying I'm trading between, let's say, 2 to 5 days, usually not holding over Friday. I don't like to hold throughout the weekend, because you never know what happens over a weekend, just too many days. And directional options is basically the vehicle I'm using, so time frame, vehicle. And then I guess the third thing, which I guess I should have submitted to you, is the strategy, which is consolidation breakouts and early reversals. So I got my time frame, 2 to 5 days. My vehicle, I'm using directional options, which means directional options means I'm just buying calls or puts. That means, I'm just buying calls or puts, because in options there's plenty of strategies. There's covered calls, iron condors, butterfly. Like there's so many different things. But directional just means it basically goes the exact same way as it's basically just the leverage on top, the leverage off the equity. Because options are kind of used more like they were created as hedges. So you can use options, for example, to protect your losses in stocks and so on. It's kind of like an insurance on a stock. But I'm trading the insurance straight, because it's so much more leverage. So for example, I would buy, let's say, American Airlines. It's trading right now at like $49. I would buy the option at a premium of, let's say, $3, for example. So instead of paying $49 for a share, I'm paying $3 per share. And with an option, you always buy 100 of them. So I would pay $300 for the right to buy 100 American Airlines shares. And the nice thing is, if American Airlines goes up $1, the premium more or less also goes up $1. So now, for example, I invested $300. Now I have a return $400. And the numbers now, if you compare them, it's a 33% return on investment versus $49 to $50. You're talking about like a 2% return on investment. So like it's 2% versus 33%. So it kind of like it massively inflates the returns, but that obviously goes both ways. So if American Airlines goes down $1, I invest $300, and now I basically have $200. So I lost 33%. It goes fast. So a big thing to I would say before anybody gets into options trading, especially directional, learn to make money with trading stocks first, because options is basically everything just faster. So if you can make money off of stocks, you have a 75% chance you're also making money off of options, but better. The only downside to options, or it's not a downside, it's just something that has to be mastered first, is that there's mainly two other factors playing into it, which is one, time. So you only buy options for a certain period of time, and generally after within the last 30 days, the price drops quickly because the value of it drops, because I only have this insurance for, let's say, 60 days. For 60 days, it's for the first 30 days, it's pretty steady because I still have 30 days left. Anything could happen. But as it gets closer and closer to the expiration date, people know not that much can happen. So the value of the insurance basically drops. So time is a huge thing. So you never want to trade an option that's less than 30 days left. So basically, if you say, hey, I'm going to be in this trade for 10 days, buy an option that's at least 40 days long. So you always want to, as long as you want to trade, plus 30 days. That ensures that there's no rapid, uncontrolled value drop in the option. So one is time. The next thing that you have to now think about, versus that you don't have to think about with stocks really, is volatility, because volatility also directly impacts the pricing of options. So for example, I go on, it's called iVolatility. It shows you charts. So when the stock is at an more or less a high in volatility, you don't want to buy the option, because with every percent that volatility goes up, the price of the option also increases. So if you buy an option at a volatility high and now the volatility drops, the stock might go in your direction, but the volatility drops, you're losing money, although the trade is going your direction. So it can be very frustrating if you don't look at both time and volatility, because sometimes you have a winning trade on the paper, but really you're losing money because volatility is taking money away from you, time is taking money away from you. But as long as you know these things, and a lot of people don't, unfortunately, that trade options, you can actually profit off them, meaning you buy options at a volatility low. So not only are you making money as the stock moves in your direction, but you're also making money as the volatility goes up, which is exactly one of the reasons why I'm a consolidation breakout trader. Because if you know what consolidations are on the charts, it's basically when the stock keeps getting closer and closer together until there's tiny movements. A stock that moves $1 a day usually, now it's moving maybe 10 cents. So volatility drops a lot. And what happens at a consolidation breakout, I can simply put my trigger right above it's basically forming a small channel. I put it right above the channel, and as soon as it breaks it, I'm in. And not only is usually a huge move following, but on top the volatility spikes. So now I'm making double the profit. I'm making money off the volatility, and I'm making money off of the price move.
Makes sense to me. I mean, the patterns that you're looking for make sense. So, all right. So, is there a good way to kind of practice with options? Can you paper trade like you can with equities, or are there any good tools that you recommend?
For sure. It's a little bit tougher just because there's so many more factors going into it. You can't just pull up your Yahoo Finance and see where the stock, the option is trading in that sense. First of all, I would learn how to trade stocks first, make money off stocks. Then once you're ready to transition, basically, Options House is a good platform. It basically allows you to trade all sorts of strategies. It's got good pricing for options, and it has a free paper trade account as well. So that's a good option right there. What I also recommend is like before you start trading like a lot of real money, basically for me it's like, you've got paper trading, and then the next level is like trade a small account. Like I said, like the $2,500, I do consider that practice to an extent, because you treat very, very differently when it's with real money versus fake money. Like for some odd reason, statistically speaking, most people are able to make money off of virtual accounts and they do great at it, but once they transition to money accounts, they start losing. It's just because it's a basically a switch in our psychology, because now we associate with like there's actual stakes. We can lose something, we don't like losing, and we think, besides losing, we think if we do well, we can get these massive amounts of money, right? And like we can actually cash them out, which you can with paper money. So, always transition. Start with paper trading, and then just make a small account and practice with options. Because with options, that is on one reason why it's good for a lot of beginners, is because it allows a smaller account size. Because obviously, like I said earlier in the example, with a $300 trade, one contract of American Airlines, for example, if it goes up a dollar, you can make 33% ROI. So obviously, with a smaller account, you can still make a large profit, and you can rack that up quickly. Like I did when I did it, like because I wanted to show people with how little you can start with. I think I restarted with a $400 portfolio, and I brought it up like to like $5,000 in a pretty short time. So, try it out. Obviously with paper trading first, but if you have a little bit of money set aside, do you think, hey, it's fine if I lose it, but I want to learn more? Play around with it. Make sure you give it the amount of time you want to trade plus 30 days. Try to stay in the money, meaning at the current strike price where the stock is trading right now or more. And just treat it the exact same way you would a stock trading, and make sure that volatility isn't at an all-time high at the moment you're buying. But other than that, treat it like stock trading at first, and then as you progress and get more familiar with the options platform, you can kind of like tweak on how to squeeze more money out by doing volatility right, by doing time right, and so on. Just don't let it like turn your way. There's more factors to it.
Okay. So another thing that I just kind of thought of, so you trade directional options. Is there such a thing as non-directional options?
Yes. So basically with options, it's odd. There's ways to make money. For example, if it goes either bullish or bearish, the only way you lose money, for example, if it stays the same level, then there's option strategies like the covered call, where you make money when it goes up and when it goes sideways and just a little bit down. So that's non-directional, because with directional options, I'm basically betting just like stocks. I'm saying the stock's going to go up, so it's directional. But there's plenty of strategies that look, for example, when you look at the risk profile, that's where directional comes in. The risk profile looks like a V, for example. So you make a lot of money if it goes down. You make a lot of money if it goes down, up. So those are, for example, called straddles and strangles, where you basically, for example, before an earnings, you bet on the fact that it's going to go somewhere, and you bet that it's going to go somewhere by a lot. So whichever way it goes, because the way options make money is exponential. So if it goes one side by $10, this, first of all, it covers the losses of this side and some more, right? Because the way, let's see, I'm just gonna make it here. You've all been calculus at some point. The way the profits for options look is like this. You've got that curve. Mm-hmm. So obviously, like if I'm saying, and then it goes like this closer. So obviously, like if I'm right here and I'm planning on buying a straddle, for example, I'm banking that it goes here. My winning trade is here. I'm making all this money, while my loss is only making this amount of loss, right? So it kind of equals it out. The only bad thing is because earnings equals high volatility, so you're buying them kind of at a really high price. The bad thing that can happen is it stays exactly where it is and both your options drop. So that's where the risk is. So look, obviously there's no scenario where there's no risk involved, but options just expand your field, where you're not just saying, is it going up or down? You can say, I'm thinking it's either going up or sideways, and I'm making money either way. So, but for me, it's not that it's complicated. For me personally, with my analysis, unless I know for, let's say, 70 to 90% obviously more, that a stock is going a certain way, I'm not going to take it, right? So why would I bet on something where I'm like, I don't know where it goes? That's why I'd rather say, hey, at this point in time, if it breaks this trigger line, there's like almost a statistical certainty, almost, that it's going to like shoot in this way. So I'm going to have a micro swing trade because I don't care about like the small movements. I just want to capture that breakout, that first initial move. I'm sure plenty of you have seen it on charts. When a stock has been sitting around doing nothing for a long time, and all of a sudden it's making like a 10% move. Those are the kind of moves I want to capture.
Sure.
And then it's that huge move that makes 10%, and I multiply it with the leverage of options, giving me the 3-digit kind of ROIs. And I don't need a lot of those. Even if I just do 2 trades like that a month, I'm killing the market like 24. So
Awesome. Yeah. So now we've kind of got that foundation. You mentioned earlier risk management, trading plans several times, systems. Where do we begin to kind of fold this into, we say, okay, we've got our money, we've got the account, we've got, we want to do either equities or options. We have our base foundation knowledge of how those work. Now, how do we kind of fold in creating the plan?
Having a plan is, I think, the number one thing you need to be a successful trader. And if you ask any consistent trader that has been successful for a long time and has been around for a long time, because generally the ones that have been around for a long time, they are successful because that's the only way you can afford it, is if they have a plan. And I brought this with me because I have this at my like standing next to my desk. I keep this huge thing, pinboard. It's handwritten. I just have my entire plans. The way I say it is a trading plan should be very simple. It should fit on maybe like 1 to 3 pages, maybe 5. Let's say 1 to 3 pages. But imagine it should explain everything from stock picking to closing to journaling. Basically, you should be able to give this plan. Maybe not your 5-year-old, but let's say, for example, you get sick and you can't trade, and or you're on your deathbed and like you want to pass this on, like, oh, there's this trade coming and somebody else has to take it for you. They should be able to execute your strategy exactly like you do with this trading plan. So there's, for me, 3 key pieces to having a trading plan. The first one kind of goes towards psychology. It's more, to some people might be superficial, for other people might be very meaningful, is kind of the purpose, the outcome. So you kind of define, why are you trading? What are you trading for? What are you trying to get out of it? For some people, some of my students, they trade because they want to pay for college with it. Some people want that financial freedom to travel the world. So to keep this short, just find out like what's the driving force behind it for you. And you're going to use this later to link it, because you have to link it in this way that you think, following my plan will lead me to this outcome that I so much desire. Doing stuff outside my trading plan, basically taking stupid risks that because the chart looks really cool right now and I want to go all in, it's going to take the dream away from me. So it's kind of the mental trigger. And now along with the outcome, you're going to put actual levers. It's called pain and reward levers, basically. Meaning, if I break my trading plan, what am I going to do? You can, if you have a spouse or girlfriend or boyfriend, whatever you are, you can, for example, tell them, hey, if I do this wrong, I don't know, I have to give you my credit card to go shopping, or something that you don't enjoy. Or, of course, I'd love to give you, sorry, girlfriend, of course you can go shopping with a credit card. No, or like you have to do something that you don't enjoy. So one of my coaches, for example, he used to make bets like he has to wear dress and go to Walmart. He's a guy. So it's something very uncomfortable that you would hate to do, just something that can be embarrassing. That's a pain lever. And then your reward lever, if I follow my trading plan, and that means even if you have a losing trade, but you follow your rules, you reward yourself in some way, shape, or form. Part 1, so that's the outcome. Part 2 is the strategy. So the strategy means there's 3 parts to it. What must be on the chart, like what must be present, what cannot be present, and what should be present. So for me, for example, being a consolidation breakout trader, for example, I want stocks that are right now in a drop of volatility, that are overall like in consolidation pattern. There's plenty of technical patterns that show there's a consolidation. Let's see, I have it over here. What else do I say? Volume decline. Then you want, like, once the breakout happens, you want that volume spike. I want to have my, my trigger right above it. Just some simple overall things that is a must for me. The volume's got to be above 1 million. That means it's a liquid stock. I only trade liquid stocks. My price is generally between $5 to $50 because again, fast moving stocks, and they're more in the price range because when you take really expensive stocks, the option premiums also really go up. And then my ATR, that's called the average true range, that basically defines how fast the stock is moving. So I like that to be above 1.5 or 2. And basically, when I put all these factors, there's a website called FinViz, FINVIZ.com, and you can basically put all these things into a screener. And then it spits out, let's say, for example, I put in all my things just before the interview, and it spit out about 26 stocks that match exactly what I'm looking for. So now instead of having to think, what am I going to trade today? I'm only going to look at those 26, and I go through them and see whether the patterns match. Now, once I see, hey, the patterns match, great. I look at the next thing. Is there anything that cannot be on the charts? So for example, for me, if it's an options trade, the volatility has to be at a low. So if it's at volatility high, I will not trade it. I cannot trade over earnings. Like I never hold them over earnings because like I'm a directional trader. So if I say it's going to go up and then the earnings drops it down by like 30%, my account's going to be dead. So I don't do that. Obviously too much risk. I don't trade gappy or wiki stocks. Stocks that are like all over the place. I want like very clean stocks basically, you know. So if I look at the chart and see, even though it matches my volume, my price, and all that, if I see, hey, it's all over the place, next one. You know, don't waste any more time on it. And then also big one, I don't trade stocks that just IPO within the first 2 weeks. So a lot of times my students or other people say, oh, what do you think about Ferrari? It's just IPOing, you know, or what about PayPal? It's like, you know what? I'll wait for 2 weeks. You know why? Because in 2 weeks, that gives me enough time to like at least see some kind of chart pattern. Doesn't mean that after 2 weeks I'm jumping in, but a lot of times I can see the first patterns and then you can use it. You know, IPOs can be profitable, but with 0 days of history, you're really just taking a gamble. You know, people say Facebook was awesome. You know, you want like it's got to be successful. People got in and they were as pathetic as suing Facebook for losing money on their trades. So, you know, give it time, let the charts chart themselves. And then like just would like to have like basically what turns like an 8 out of 10 into a 10 out of 10, right? So you can put in some extra factors and make it great. So now basically what you have is like a 3-line sheet, like, you know, like a pro-con sheet where you just like, you go like, so I put in FinViz, I get my 26 stocks, now I'm looking at them. Does it have this? Yes. Does it have this? Yes. Does it have this? Yes. Okay, good trade. Just making sure it doesn't have these things. Great, moving on. So that's a strategy. You exactly put down what am I looking for? What can it not have? And then you simply write out down a step-by-step plan. So what's the first thing? You obviously check these facts. Next step, I'm going to determine my target, my entry, and my stop. Every single time you got to have a stop. And you determine it using you know, support and resistance or whatever system you use. And as for stops, that's how we transition into the third aspect of the trading plan. So first you get the outcomes, the kind of the pain reward lever to manage your psychology. The next part is the strategy, which is to determine which trades to actually take. Step 3 is risk, account, and trade management. So that's basically the page you'll look at once you're in a trade. What am I doing now? So the way I do risk management is that on every single trade, I risk the exact same amount of money. So for example, it's called a risk unit. You know, it's been passed down from coach to me now passed down to my students. So basically, let's say I have a $5,000 portfolio, right? 1% of that is $50, right? So my risk unit is usually between 1 and 2% of my total account. So let's say I have a $5,000 account. I'm going to risk 2% because I want a bigger return. So I'm risking $100 in every single trade. And the way so it's every single time I risk $100. What you do now is you've determined the actual natural stop. So I look on the charts. Naturally, the support line is, let's say, $1 below, or let's say $2 below my entry. So I do my risk unit of $100 divided by a risk per share of $2, which then tells me 50 shares. So a lot of people, they just say, oh, I'm going to buy X shares, or every single time I'm buying X shares, but that's not how risk management works. You have to like actually do risk management by the amount of dollars lost in trade. So this way, maybe on one trade, I have 1,000 shares or 10 shares. Shares really don't mean anything. This way, you really boil it down to the same amount lost a trade. And it makes it great because let's say you have 3 trades and your goal is to make three to one risk reward ratio, right? So I'm losing 2 trades, I'm winning 1 trade, but on that winning trade I'm making $300 versus on the losing trade I'm losing $200. On those 2 losing trades I'm losing $100. So even though I only am right 1 out of 3 times, I'm still making $100 profit, which again is 2% of my account. So there you get your 2% a month. If you only do 3 trades, and you can obviously like improve those ratios. Gets even funner, of course, if you're more than 1 time out of 3 right. And that's basically like how it boils down. I could give this to someone else, and they should be able to run with it. And you also put in the risk. So risk account, trade management, risk management. You say this is my risk unit at this account size, and then trade management is how do I adjust it? Like what kind of stop system am I using? Am I using moving average stop retracement system? Am I using parabolics? Am I using just like eyesight or a trailing stop? There's plenty of options there, but the most important thing, I'm not going to be here to tell you exactly which one to choose. That's whatever coach you choose, and they'll tell you which works best for them. But what I'm definitely here to tell you is like you have to decide on something, because whenever you're second guessing yourself in a trade, you're going to lose. Basically with this plan, I'm never second guessing myself, because like if I'm like, oh, what should I do now? Well, let me look at my plan. This is how I move up my stops moved up. Am I stopped out yet? No. All right, I'm leaving my hands off it. You let it go. And that way you just follow it. And the only times you really have to do something is punish yourself if you don't follow it. And then next time you won't make that mistake again.
What was your punishment?
Oh, it's been all over the place. Basically, I've done all sorts of things. I don't want to say them up here.
Fair enough.
But they've been, just like embarrassing things, or basically support causes I really am against and stuff like that.
Sure. I remember, I can't think of what the particular service was right now, but there's I know at least one company out there that you can put up the money ahead of time, and they kind of hold it in escrow, and then you have to have a third party come in and verify whether you did or didn't do it. And if you didn't, then of course they'll release it to that predetermined cause, or if you followed through with whatever, they'll return it to you. And maybe I can find that and link it up for anyone who wants to use something like that.
That's awesome, yeah. And honestly, like if you can find a trading buddy, that's also great. Having an accountability partner is huge to trading. An accountability partner, I think there's 2 different types of accountability partners. There's basically a fellow trader that's kind of at your level, so you both like friends, like you're keeping each other in check, double checking each other's trading, and like making sure keeping a second eye on it, and also making sure you guys are all staying on point. And then there's the mentor. The mentor, like you probably shouldn't hit him up like for every single trade. That's what your accountability partner is for. But like I've been there myself, even in recent times, when I'm really like, damn, what am I doing? Like I just broke my plan. I lost all this money. Like what am I doing wrong? Like instead of being consistently profitable, now I'm consistently losing. What happened? So that's where you go to your mentor. And because otherwise, if we just internalize everything, and if we just like trade from like within us, we basically lose sight at some point in time, and that's when your profits suddenly start going down. And unfortunately, as you say on Wall Street, it's the stocks take the stairs up but the elevator down. So you can do great for an entire year, but you can mess it up in a week. So you just gotta have these people that like notice on day one, like, whoa, what just happened? Like, what did you do? What happened there? They don't let you revenge trade the next day, the next day, the next day, which is definitely a thing. Revenge trading is one of the biggest mistakes you can make. It's basically when you made a mistake and then you're trying to undo it by doing even more stupid things. So,
yeah, not a good way to get back. Cool. So that kind of like lays out a good outline of the system and everything. And we talked a little bit beforehand. Would you be willing to do like a quick screen share to kind of walk us through your process of preparing for a day or trading week?
Yeah, let me see, because my laptop shut down, but I got it. All right. All right. So that's where it starts, Finviz. So first, I'm putting in my factors. As I said, the trading plan. First, basically screening, finding what stocks to trade. So I'm looking at, for example, descriptive. For me personally, average volume over 1 million. Current volume over 1 million. I want it to be optionable. Price, I said $5 to $50. And then under technical, I put in the ATR, the average to range, remember? So I want basically average to range in this case means on the average day, the stock moves $2. Obviously moving $2 on a $5 to $50 stock, that's massive moves. which is nice because I want these quick, fast trades. Now it spits me out 33 trades, and I could just go over them and see really quick what are the charts looking like. So this one, for example, ALKS, even though it's sitting tight right now, this might be a long-term trigger because I can put a trigger line above and below. I wish I could paint on my screen. But let's just find one. I think down here was one I wanted to show. Let's see, AP. I mean, they're all looking basically the exact same way the market is looking right now, because right now we have a very dominant market, meaning most price action with individual stocks is just driven by how the market is going overall. Like a lot of these look just the same way as the S&P does. So I wouldn't take them, but I think I wrote down one earlier. So once I find the ones I want to look at closer, so maybe, these 33, during my Periscope sessions, I would cut them down to like 10 or 15. Now those 10 or 15, I'm going to TradingView, which is the charting software I personally use. And I put them in RDUS. So this one, for example, is something that popped up that fits my description. And what I found here is, for me, let me take out volume for a second so you can see better. There we go. It looks like an early reversal, right? Because we have a lot of factors here that I like. We have, we're kind of right at the support. We have the rounding bottom. We just had a huge fall, and there's a huge void. So like the next thing we really can trade to is maybe here, which is perfect because first of all, we have the support and we have the long-term moving average coming down on it. So if I were to take this trade, for example, I would put in my risk-reward ratio, long position. We've got a big move today. It was going it gapped up, which first of all creates sign for reversal. It kind of retested, came back, and today had a strong move. So let's say I enter here, and I want to put my stop, let's say right below the little wedge here, and put my reward all the way up to this line. See, I wouldn't take this trade right now, at least under these conditions, because it's a 2-to-1 risk-reward ratio. So something would have to be finagled. If I wanted to, I could tighten it up and say, that could make sense. There we go. I'm kind of forcing it now, but let's say I wanted to do this. I'd put my stop right below the wick of today's candle, because more than likely it will keep going up. My target is up at 14.16, and from here on out, I enter. So my stop value is 455. If I have a risk unit of $100, right, I would now obviously calculate, let's see, $100 divided by 455, which is, that determines my share, how many shares I'm taking. $100 divided by 455. So I'm buying basically 22 shares, right? So now I know I'm buying 22 shares. I can write on here. So, well, that didn't work well. 22 shares. Boom. Perfect. If I want to trade options, the next thing I would look at is volatility. 3, 2, 1. Right now this is Tesla. Let me look at the stock I'm looking at, RDUS, and the chart. Let's click it on here. All right. I mean, compared to historical volatility, the historical volatility is basically the blue line. The mean index is the orange line. So generally, I would want the orange line to be underneath the blue one. It doesn't look bad. It's like if it was up here, I wouldn't take the trade yet. But down here, it's fine. So it doesn't bother me. I could take the options trade. And now I would be entering. The next thing I would obviously determine if I'm, what's my stop system. So maybe I'll throw in another moving average. Do I have one, or is that, let's say I use parabolics. With parabolics you can also use a stop system. So, like you basically always put it with dots, the dots, the dots, the dots, the dots until here you would have gotten stopped out. So using the parabolics, you could have taken the whole trade all the way from up here all the way to down here, right? So you just decide on one stop system and take that all the way. Anything else? One thing I'm also big on is Fibonacci analysis. Wait, what's up here? Yeah, Fib retracements. So I basically use it to determine my target. Let's see if it works. It's not much to go off. I can use the reverse. Let's see. It's most likely Fib level right there. All right. So, for example, now I see there's another Fib level, the 0.618 line, which is very significant. Basically, if you believe in Fibonacci analysis, which I do, because it's worked for me countless times, it basically says that the market moves kind of in waves, like Elliott wave theory, and it moves in specific ratios. That's a big thing. It moves in ratios. Fibonacci is it's a very old concept, like dates back to, I think, the Greek times. And it can be found anywhere. Wait, actually, Fibonacci, no, that's in Italian. It's back from the Renaissance. So Fibonacci analysis can be found anywhere from, for example, the way shells shape. It's the golden ratio. You probably learned about it in math class back in high school. It's the way trees grow. It's the way animals reproduce. Basically, the numbers. So basically, it says stocks turn around at these key numbers. So my target would be somewhere in this area now. Let's put another line here. Right here. Somewhere here, I would definitely want to get out. So I'm getting in now, and then I just keep moving up my stop. And if it's not touching either, it's fine. Otherwise, I'm getting out. And if it's successful, I'm making $300 off it. If it's not, I'm losing $100. Boom. And if you want to do this with a bigger risk-reward ratio, if you wanted to use options, you can make a couple thousand on this trade. But yeah, so this is kind of how I'll go through it. And the way I do it is like I said, I start with like 30 or more. Let's say I start with 50, cut it down to like 20. And then I look at the charts of the 20. And I probably wouldn't take this trade because it's not good enough for me. So what I do is I look through 20 different charts and I want to pick my top 5 and I just cross out the other ones. I'm not even looking at the other 15. That way I just look at the top, like my top 5 setups and follow them for the rest of the week. And I used to do this as like I would actually sell them in the past. I stopped doing it just because it's a lot of effort. But if you look at them, they all used to crush it. And I'm just pulling up my website real quick, not for self-promotion, obviously, but real quick, just because I talked about the profits of those for the weeks I did it, because it was transparent at the time, where people could see like the shit I'm doing is actually real. All right, it's not loading. Anyways, if you go under stock picks, it shows you that basically I did it for like 2 months. For the 2 months, 5 out of 5 of the stocks I submitted were all profitable, and they generally all made 10+% in stock value. So if you look at, for example, one of those trades was Etsy. I called that trade here. I called that trade back here. I said, this is a consolidation. We had an early reversal here, move up. It's slowing down. This is going to be a huge trade. I said that. It wasn't I even had screenshots and everything. And then I captured this move. And it was from $16 all the way to like basically $23. So, and it actually went higher because there's a wick. So basically this stock moved up by like, I think 50 to 80% in one single day. And I called it that week. And I do it I do it weekly. Like I said, I do my analysis Sunday night. I submit my stocks that Sunday night, so you have it throughout the week. And you'll, throughout that week, you can use those triggers. And whenever any of those triggers, you go in, and the next week you have new ones. Because like I said, I do micro swing trading, so I always look at it from a 1 week perspective. Okay. Yeah. And regardless, I still keep an eye on the overall market, which is very important. Because as I said earlier, right now stocks are mostly driven by the overall market, as you can see, kind of this pattern. Like just look at this right now.
Very similar pattern that we were just looking at.
Move. and then you go to, wait, where is it? There you go. This looks basically like the S&P, slightly like the S&P. Um, Not this one. There's just a bunch of them that like they just moved up right now. Moved up, having a small downturn. So know what's going on in the market overall. And for example, right now, like the S&P, like if you use technical analysis or just my trading system in general, was so easy to trade. Like first of all, you see like it's a declining slope up here. You've got a multi-top. I traded that down and I made great profits while like people were like crying on Twitter and stock tweets of like how they're losing their earnings and whatnot. And then again down here, like one of the simplest technical analysis patterns, you've got a double bottom down here. So I got back in bullish here, traded all the way up to the moving average. Obviously, you see some resistance at the moving average. Plus, you've got resistance up here, resistance here. So that's why that's why I'm a micro swing trader. I don't like holding it here and keep like just basically I don't like buying it here and holding throughout all this garbage. I like buying here, selling here, shorting here, buying to cover here. Like up and down, up and down. I just take the direction. So for me personally, I only traded when the minor trend is matching the intermediary trend. So that's Dow theory. Basically, I wouldn't trade this down move right now because the intermediary trend, if I have a pen, is going up, right? So I don't want those to conflict. Like this little thing, I'll get whiplash. I don't trade this. I only trade it when it goes the same way. So for example, intermediate trend going down. So I also down traded this down move. But I wouldn't up trade this little thing because I know it might crash afterwards again. So I don't care about the primary trend, but I do care that the intermediate trend does not conflict with the minor trend. Okay. And that's about it. I mean, that runs it through the whole thing from I'm starting with nothing, I'm finding out which stocks even fit my rough description, taking a closer look at them, double checking that it fits an option strategy, or if it doesn't fit an option strategy, I might as well trade the stock. Like if it's a great trade, I'll just trade the stocks, not an issue. And then you enter and you follow your trading plan. Yep. Awesome. Is screen sharing over? Oh no, stop sharing.
There we go. All right. So, wow, that was great. I mean, thank you so much for walking us through that. Let's, I guess, just kind of start to wrap things up. I just kind of want to finish up with one last kind of big question, and that's just what do you think are some of the most common issues that you see that hold back active traders from getting their next level of profitability? People that you kind of start hitting a wall, either profitable or not, but they've hit that wall. How do they get to that next level?
I would say three things, and I'm still thinking of number three. But the first thing is discipline and persistence, and it goes again back to the trading plan because I see plenty of traders that are like, and that used to be me, like. Not to tout myself, but like I'm a really good analyst. Like I can, with the stock picks, for example, I can find 5 out of 5 mad profitable trades week after week after week. But sometime in the past, I still managed to lose money while doing so. The reason is because like I had my 5 trades, but then sometime during the week, I look at the 6th one like, ooh, this looks great. I'm just gonna go in. But I didn't put that same thought, that same and like that same patient analysis into it as I did the others. So sometimes people break their routine, break their strategy because they think they can outsmart themselves, which never works. So number one, write that trading plan and then really commit to it. Like if you don't believe in it, tell yourself, I'm going to stick to this for 20 trades at least, or like 1 month and see how it goes. Because more than likely it will work in your favor. And just because the first trade is a losing trade, doesn't mean anything. So just like stick to it and see how it ends up, because more than likely it will be a lot more consistent. And for a lot of people, maybe it's your first profitable month. I don't know. So persistence is key. Number 2, get training, coaching, anything. Again, this goes back to what I said earlier. Trading is not this thing where you just start out and become the Wolf of Wall Street. It does take some education, training, whatever. And most of the speakers here, maybe some of them are more on the bragging side, I don't know, but I know that almost every successful trader I've talked to, they're pretty humble about it. They're saying they probably lost money in the beginning. It took them a while to get the hang of it. They also got education. Almost nobody will tell you that they just did whatever and were lucky and made a lot of money. Almost everyone had a mentor. Almost everyone like has somebody they can attribute it to. Like for example, Tim Crotani, he learned from Tim Sykes. So, and generally there's always some kind of correlation. So get a good coach and like seriously listen to what they say and apply what they say, because it's one thing learning something intellectually and not applying it. So really learn what they say, put it into a plan, and apply it consistently, and you will see the results. Like I guarantee it. So that's 2 out of 3. And then I guess the third one is to move from being a theoretical trader to an actual trader. Raise that money, be strict with yourself, set yourself a goal, say, hey, I'm giving myself 2 months, 3 months to raise that money, which is also a great time to use for virtual trading to get some more practice. But you seriously can fund an account if you really want it in a short time. Because people I've coached in the past, they say like, oh, I don't have the money, I'm just going to quit. Yet I see them going to the clubs and bars, spending $10 at the door, $20 on drinks, or just like, wasting money on stupid things. It's seriously one of the biggest investments you can make to basically start investing in trading, and more so to invest in yourself. Because first of all, you get that education, which allows you to trade better for the rest of your life. So that's like a 4-digit ROI right there. And more so, you can also learn some lessons from trading that applies throughout life. Like the discipline I learned from trading really applies everywhere in life. I'm not even a finance major. I majored political science because back in the day I wanted to go into politics. But the amount of like finance savvy that I got out of learning how to trade has applied in so many ways that now that because I'm also into startups, I'm a startup CEO, that finance knowledge really helps me so much and gives me another edge. So even if you say, I'm not sure if this trading thing is for me, try it out, give it a shot, learn it. And worst case scenario, you'll be able to pick a better financial advisor. You can tell if somebody is full of it, and say like, I'm going to choose someone else. Like even if you don't trade yourself, it gives you more knowledge to choose the right person, or at the very least, it gives you other skills that apply throughout life. So really, you're not losing anything learning how to trade. It's an incredible skill to have, because honestly, one of the things we care about most is, we always talk about money and time, and knowing how to trade gives you access to both. So really, it's one of the greatest investments you can make.
Awesome. So with that, let's just kind of start wrapping things up. If anyone has questions for you. So one, we're going to be doing another Q&A session live during the event, so people will be able to follow up with you there. But if they missed that and they want to get a hold of you, what's a good way to get a hold of you? And is there anything else that you wanted to mention or talk about?
Sure. So for getting a hold of me, I'm very active on social media. You can tweet at me. I'm sure he'll put out the tweets in the description. It's Felix O. Hartmann. I also am very active on Instagram. So Twitter, Instagram, you can just DM me. You can tweet at me. I'll reply. I reply to every single Instagram DM. I also have a website. So on my website, there's contact formulas. You can contact me per email as well. And we can take it anywhere from there. Sometimes people just have a few questions, and I'll give free advice, obviously. But I also offer coaching. So as of right now, I'm only doing a private personal coaching. So basically, you'd be sitting on Skype with me, just like we are right now, and I'll run you through everything. And I created a coaching program. One is Trading 360, which basically takes a complete bloody beginner from nothing to being profitable. And it's only 10 sessions, so it's basically 10 weeks. Or if you want to do accelerated, we can do 5 weeks. And it literally teaches anything. It's like it goes off like if you don't even know what a stock is, but I go through the really, really quickly. And within by week 5, you know all of Fibonacci analysis, how to trade options, like basically anything you could possibly imagine. You will know more than the way I said, like more than 99.9% of the people, because most people don't know jack shit about trading really. So that's going to be awesome if you're a beginner. But what I also offer is breakthrough coaching. So that's if you're already a trader, if you're already maybe, kind of profitable, maybe not profitable, maybe just a break-even trader, because there's tons of break-even traders. That really focuses on more the trading psychology, the trading plans, the risk management, really what will help you elevate above that level so you can start making consistent profits. So I've worked with, experienced traders, beginning traders, and obviously like in Trading 360, I include breakthrough coaching, but breakthrough coaching is just more separate, more intimate, more intense, where I really like want to look at your trades and like as you trade real money, like, I mean, that's up to you, but as you trade, I will look at your trades like, hey, why did you exit there? Like you plan obviously something different, or like what made you make that choice, and then we can dig into your psychology and really change it and kind of like reprogram it so that you can be consistently profitable. Yeah. And
Awesome.
as for that, right now it's private coaching. However, I am planning on creating, a little bit more scalable that I record all these lessons, and they'll be available on video. I would say about in the summer. And if you're interested in stock picks as well, you can contact me and I can relaunch that for sure.
Awesome. Cool. So if anyone wants to get a hold of you, follow those directions by all means. I mean, Twitter was how we got connected in the first place, so yes. I can attest to that being a good method. But yeah, cool. Thank you so much for taking time out of your busy day and being willing to share all this with us. It's amazing information, and I really hope that everybody's able to get some really good, useful, actionable advice out of it. And yeah, so with that, thank you so much, and we'll see you at the Q&A.
Thanks for having me, Jacob. I'll see you guys later tonight, I think, because I'm pretending on the 29th, which is when you see this video. So with that, take care. Good luck with trading, and ask me any questions you have.